Hi, in this Forex video tutorial we're going to look at the Fibonacci tool. So let's start by clicking the Fibonacci icon here, and we can draw our Fibonacci tool. Now this is the one that comes default packaged with MetaTrader 4 and other trading platforms, and we're going to want to modify this. So let's do that here so we can take a better look at these levels. The 2.6 1.8 and the 4.23, we don't need those. So let's open up and go to Fibo levels, and I'm going to delete the last two. And I'm actually going to add a new one here, and that's 1.382. And we'll hit OK, and that's changed our Fibonacci levels. Now, I don't know about you, but what I've seen over the years as far as Fibonacci is explained, nothing is really consistent or practical in my own personal opinion. It appears that nobody really kind of knows what they're doing with it. They'll tell you, okay, anchor to a high, anchor to a low, look for price to hit like your 618, and then you go short to one of your targets here. And the thing is, well, is it this high and low, or is it this high and low, or is it maybe one back here or back here or here or what? So what I'd like to do here is just take this weekly, this is the dollar yen weekly, and just kind of simplify things in a way that's easy to understand, and everybody that applies it can do the exact same thing. No two people are going to draw their Fibonacci tool differently. Okay, so looking at the weekly chart here, what we're going to do is, for example, we'll take this candle here, and we're going to just anchor to the high and the low of any of these weekly candles. And when the next candle breaks like this low here, this becomes our trading range, and these here become our target range, these target extensions. Now if price were to have done the opposite and broke the high, we would just apply the same rule in the opposite direction. This here would be our trading range, and this would be our target range, but price did not break this high. Now this here is not a trading strategy at this point. We're just going to build our groundwork and work from there. And in our other videos, we'll dig in a little bit further and show how we can consider applying this to our trading. So let's just go back here a little bit. And let's just start at any high or low. Go ahead and use this one right here. And at this point, we're just going to observe what price does. So we'll take this closed weekly price candle and look to see if the next one breaks the high or the low. In this case, it breaks the high. So again, this is our trading range. Actually, the entire thing is our trading range once this high breaks, because we're going to just place a mental stop right here at that low. Okay. Not that we're actually going to use that for a stop loss, because again, this isn't a strategy at this point, but just for practice and observing price, we'll just mentally call this our stop, and we'll call this, if it breaks, a trigger area to give us an established bias, which in this case, it broke the high, so our bias is to trade long. Okay, price breaks and hits our target extensions, and let's just run through these here real quick. Price breaks the high, target extensions hit. Price breaks the high, target extension hit, touches the 1.382 level and reverses. So we'll go to the next candle. Price does not break the high, So we're actually going to reverse our Fibonacci tool, and we're actually going short. We come into our target range. Next one, price breaks, target range hit, target range hit, target range hit, again and again. And then here we don't break the low, we break the high. So now we're going to reverse our Fibonacci anchors, target range hit, okay, and hit again. And this one here, this is bearish, and it looks like it actually broke the low here first, hits the target extension. And this is something you can pull up any weekly chart and just practice this and take note, how many times does it hit your target range before it comes back and hits a stop loss. Okay, so target range hit, and now it actually reverses. Target range hit, hit again, and then here it does not hit and price reverses. Okay, target range hit, target range hit. Here we have a candle that has not broken, so we can just kind of sit on this one for a little while. Same with this one, price has not broke either side, so we can sit on that one as well. And this one here, it has broken to the downside, so we now are looking at a trading range. Actually, this entire thing would be our trading range, but right here with a possible target to consider, consider price is going to go here before it comes up and breaks this high. Okay, again, just a general bias. Doesn't mean it's always going to work for those that are looking at it that way. Because here, we gained a bias to the north to go long, and price came back and hit where we would have a mental stop. Okay. So here, again, short. So we've got a short bias here, and we have a short bias here. Okay, so that's the end of this video, and we'll see you in the next one. So just take what you see here and practice it on weekly charts, and just take note, how many times does price hit your target extension, and how many times does it fail and come back and hit that opposite anchor point.